Good afternoon, traders. Today's Saturday, June 3rd. In my last YouTube episode last week, I revealed what the market maker's ultimate target is for 2023, SPY 460. I'm now going to reveal for you how the market maker plans to get to SPY 460. Today's market blueprint is going to iron out exactly how it plans on getting there. And you're not going to find this anywhere else on YouTube because nobody else knows. The mission objective for today is going to iron out in detail. I tweeted this out last week. The bull market blueprint and exactly how it's planning on getting to 460. And then we're going to get into the tweets that I have tweeted throughout the week, and to end it with intraday action. I did day trade Friday, yesterday. Finally, I did not do that the entire week, Monday through Thursday, though. So let's get right on into it. First, I want to start off with what our good friend Mike Jones has to say about the MACD. And what does he say? The MACD is momentum. That's what I have been saying for months now. I noticed that Mike is now starting to reference the MACD in his episodes. He didn't do that for a long time until recently. So that's interesting. So anyways, the MACD is momentum, and momentum is horsepower. I don't care what you project on your charts. If you don't have the horsepower or momentum to get there, you're not going to get there. Full stop. And the NCAA basketball tournament is a great example of that. How do you go deep? You have momentum, don't you? Things are clicking at the right time. You're peaking at the right time to go deep into the tournament. So, I think I might have to actually zoom in on this one a little bit. I tweeted this out back on May 28th. That was a week ago. Let's zoom in on that. So, I noticed this really for the first time. The 1 week SMA 20 has done a positive cross over the 1 week EMA 50. Right there. You can kind of see it. Okay? That doesn't negative cross easily, guys. The last time it did that, it took a pandemic to do it. You hear me all the time talk about negative cross, positive cross on the MACD, but now you're talking about a positive cross on the SMA 20 weekly chart. Weekly chart. Right there. You can barely see it, but if you can't see it, that's okay. Go ahead and chart it on your trading platform, and you will see it front and center. Last time it does the positive cross, what happens? Boop, 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 boop. Boop, 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 boop. Yeah, I thought so. Okay. At the time I tweeted this, so that would have been Sunday, May 28th. I just made a bombshell finding. Exactly how the market maker plans on going up to 460 and beyond. Related to the movie Kill Bill. How the bride exacts revenge on those who wronged her. What I see blows my mind. It just blew my mind when I saw what it was finally doing. And you ready to get your mind blown? The June 17th actually was the low and the end of the bear market. Yes. And you're going to see that front and center. The October 13th low was the start of the bull. Yeah. Blow your mind, doesn't it? Blows your mind. You're going to see another tweet. Let's see here. Okay. Here it is. This is exactly how the market maker plans on taking 460 back. They are taking each monthly high back one by one, by one, by one, by one. We're going to get into more details of that. Okay? That's exactly what they have been doing. Now, the consolidation in mid-May. Remember when it was just chopping around, chopping around, chopping around in mid-May? I couldn't figure out what was going on. Now I know. Chop, 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 chop. Boom. Breakout. This band. This is the monthly high band that it has been scheming and tracking to this whole time, ever since 2022. June low, the drone. October low, the hive. Ever since 2022, it created this band. Look at the pattern. Down, up, rejected, up, down, up, down, up, up. It's been consolidating under the band. And what do I always say? Consolidation under any important line, especially this band, is bullish. Yes, it was. It's bullish. Unbelievable. Unbelievable. The sweet spot all along was 407 to 418. That's this band. Here, let's zoom in again. It's tough to see. Notice all rejections in 2022 and 23 was at the band. Except last Friday. Well, except last Friday. That would have been a week ago, not yesterday Friday. The Friday before yesterday. It broke out of the band. Now, August did, but this was not August's time, was it? No, 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 no. But it's time now. It broke out of the band last week, guys. First time, oh, here we go. First time since August 16th, 2022. Higher high. Boom. The August 16th higher high here was market makers' intent to go higher. That's the irony of all of this. Makes a higher high, do a down, then up from the October low. You guys, this is the June high. You're going to see another tweet on this. It's going to be front and center clear. This is a higher high. You make a higher high. The market maker is officially announcing it is going higher. But it's first going to make a lower low here. Okay? This is just unbelievable. Unbelievable. I'm going to show you other patterns. It happened just this week. It happened just this week. I'm going to show you that tweet too to prove it. Higher high, lower low, up. It happened again this week. February of this year. Oh, right here. February this year. February of this year. It took out multiple 2022 monthly highs. Namely, July, September, December, November. Okay? Yeah. That's why it struggled, in February, boom, 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 and then down, back up, struggled. It's chopping up. That's what the market maker was planning all along. This is undisputed fact. Okay? And I'm going to show you the intraday charts, intraday tweets when we get to it. This is undisputed because I'm calling out specific levels yesterday. Specific levels. And guess what? The market maker went right to it and pivoted off those levels. Yeah. So there you have it. This all fits in. All of this fits in to the notion that I presented last week of This was a hidden bull market all along. All along. And dare I show you the monthly chart that I showed last week on the hidden bull market? Now you guys will look at the monthly chart. It's pushing up even higher than when I showed the chart last week. To the right. Okay, here we go. Yep. You won't be able to see this. To the right are more monthly highs inside the band on all levels that are natural resistance points that MM was using to pump and dump. In all of 2023, the market maker was using these monthly highs as resistance points and pivot points to pump and dump. Every time. Look at this. There's June. It took June, February, April 2023, July 2022, September, okay? So you have the numbers right there. January 2020, oh, is that 3? Yes, I think that's a 3. No, that's not January 2022, because January 2022 is near the all-time high, so we're not even close to that. Okay? So, there you have it. As of Friday, May 26th, all right, let me zoom in again so you can see the numbers. Made a higher high. This was last Friday, guys. And guess what happened yesterday? It made another higher high. Okay? So, here, let's check it out. Oh, it was January 2023. This is last week, by the way, guys. This is not yesterday. Okay? It took it out. Boom. Made another higher high. And guess what it's going for now? 429.66. That's May 2022, guys. 429.66 is May 2022. And you saw how close we got to that yesterday. Okay? There you have it. Doesn't it blow your mind? It has nothing to do with volume-related buying. It has nothing to do with supply zones that they like to talk about on all YouTube channels. It has nothing to do with any of that. It was always the monthly highs it's going for. Always. So, let's keep it going. Okay, once it gets to 457, February 2022, 457, April 2022. Oh, you can expect a dogfight. You can expect a dogfight. So if it starts chopping in the 457 range, before it gets to, it's like, man, it seems to be struggling to get to 460. Yeah, because it's trying to take out February and April. Okay? There you have it. After the dogfight, the end of year showdown 462 is the main event. Let's see here. Oops, sorry. Nope. 462 is the main event. Reclaim 462, and SPY proceeds to the end game. 479 by Q1 2024. Okay, here we go. Here's an example of, here's a higher low. Okay, here's a higher high, right? Here, then there. Higher high, higher low, higher high from the higher low. Pretend that's June 2022. Pretend that's August 2022. Lower low from here. And what happens? We all know what happened in January, February. See you later, sayonara. Are you speechless now? Well, get ready, because I got more stuff to show you that's going to blow your mind. Okay? Yeah, August 16 was the market maker's official intent to go higher. And what do we know now in hindsight? And that I have been saying for months. We have gone higher. It was masked by the Fed Jackson Hole event, and it was masked by the lower low on October 13th. Haha! But it was always going to go higher, and that's exactly what it did. Okay, what do we have here? Let me look and see what month. Here's an example. Oh, is this January? Yeah. Yeah, 2023. Oh, actually, no, 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 no. Here's okay. Earlier, I showed you that was December, right? Higher low, higher high, higher low, higher high, lower low, right? That's an example right there of what happened in June, August, October of 2022. But here's another one. Look at this. January. Higher high, higher low, lower low. Well, and then it went up. Actually, 1, 2, 3. Yeah, this is the higher low. 0.3 is a lower low, but then it rockets back up. You guys, it does this all the time. I saw it happen again this week. I should have a tweet on that, but we'll get to that when we get to it. Same, 1, 2, 3, macro level. Okay. All right, check this out. Look, this is 2021, guys. Up, down, up, down, up. The pattern repeats over and over and over again. The market maker loves to fool you by, oh, it's a higher low. And in this case, okay, here we go. Here's an example of this. Here's June, August. Up. Oh, you're making a higher low. Oh, you're making a higher low. Oh, you're making a higher high. Here's a higher. Here's a high, right? Because that's lower than that. That's a high. That's higher than that. Oh, that's lower than that. Oh, we're going down. Not so much. Okay. Oh, here. This is just clarification. Here's June. Here's August 2022. So, once you make a higher high, that includes yesterday, you have permission to go lower. But it does not mean you have to go lower. You're going to find that. You're going to see that front and center when I show you the intraday tweets. Because I actually shorted the morning. But I quickly reversed and made calls. Okay? Okay, here we go. Ho, 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 ho. Better look closely. Look closely. There's bullish divergence on the 1 day. 1 day MACD. Lower low. Higher low. And oh boy, you're going to see another tweet like, oh boy, what has happened since last week? Yeah, buddy. Bullish divergence. Bullish divergence. Boom, 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 boom. Okay? It's always about momentum. I am frankly not interested in being quoted, oh, well, look at this level, look at that level, look at this level, look at this level. I don't give a damn about any of those levels. Market maker's not tracking to that. Why should you? Oh, this is the bull bear level. No. No. That's not right. I never look at levels, and you know those who follow me now, I never, ever look at chart patterns. Oh, that looks like a bear flag. That looks like a reverse head and shoulders. I'm like, I don't even know what you're talking about. Somebody asked me on Twitter the other day, he goes, does that look like a bear flag? I'm like, what do you mean bear flag? Because I don't think in those terms. I think in, look, you got momentum, you got a horsepower or not, yes or no. It's a yes or no question. It's not, well, statistically, anytime you have a rising wedge, 75% of the time, it's going to fall out of that wedge. Well, guess what, guys? I could draw this. I can make this look like a rising wedge. And have we fallen out of that wedge? No, we keep going higher because we have momentum. We have horsepower. Not, Well, 75% of the time, that's a rising wedge. It's supposed to fall out. No way. I will never look at those patterns like that. This mission, should you choose to accept it, shall be titled Operation Obsidian Moon. What I'm referring to is the 2024 endgame, where SPY will make an attempt to go for all-time highs. Operation Obsidian Moon. Everything has come full circle. The drone, June 17th low. We are now tracking to that line. You're going to see it in another tweet. We are tracking to that line. October 13th, the hive. That's right. That's the beginning of the bull. That is the end of the bear. So this bear market actually only lasted 6 months. But yet you're going to hear on the media, oh, well, bear markets usually last about a year and a half, 2 years. I've also heard on CNBC, well, we don't really know the end of the bear market. We don't know where the real low is until months later. I've heard that before. I'm like, the only reason why you don't know is because you don't have any idea what you're even looking at. That's why you say that. Well, we don't really know where the low is until months later. Oh, don't get me started on the media. You guys already know about, you existing listeners know my position on the media and the news, and I think I've got another tweet on that. Anyways, Operation Obsidian Moon was inspired by U.S. military and intelligence operations. Neptune Spear, the death of Osama bin Laden, SEAL Team 6, Stuxnet, U.S. and Israeli forces intelligence, disabled Iranian nuclear program. So I was inspired by these military operational names to come up with Obsidian Moon. Creative, huh? Okay, what's this tweet all about? Oh, yes. Here's the tweet that I sent out on May 18th. You know, that would be hilarious if by 8 p.m. extended hour SPY finishes below 421, and then we wake up to find that it gaps up above 421. Did you guys notice? That's exactly what happened. we gapped above a gap. Oh, this is last week, guys. So keep that in mind. Okay. Now, what was this? May 30th. It never did reclaim 421. Okay, yeah, this was intraday on May 30th. What was that, like a Wednesday, I think? Okay. So, I tweeted out in a different tweet. Here we go. If it reclaims 421.12, 421.25, 421.28. See, now I'm getting real specific in my tweets. Look for this specific level. Okay, I'm dialing in my analysis to look at candles from previous days or weeks or months to find these levels. Okay? It has to reclaim 421.12. It was at the time that I sent this. Yeah, 421.12. We'll just say it's like right here. I had to actually. I had to leave. And I couldn't trade intraday on this day. That's why I came back and tweeted this. Oh, interesting. It never did reclaim 421.12. So it went down, and has been down since. Okay. Now, yeah, this is the same day, May 30th, going down. But look where I said here, it could be bottoming right now for today. So if you're looking to scalp calls to close at 4 p.m., close your positions at 4 p.m. same day, this could be it. I'll wait for it to push past the main channel on 419.40. right here, main channel, 419.40. Hey, what happened? Boop, 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 boop. Okay, so 419.93 was the key. It's past that now. It's going back up, scaling along when it comes down a bit. Oh, that was an earlier tweet. Okay, so yeah. On this day, the following day, it went down further. So I did make the right call. This is the bottom for today, for that day, May 30th. It takes back 420.72, then it plans to go even higher. Yeah, that would have been right around here. Okay. Oh, there we go. It's going higher. Okay. So, yeah, this was the night before. I think it was the night before the debt ceiling vote. I'll have to look that up. I can't remember now. The days kind of run together. Okay. All right. Check it out. So it did go up to 420.95. Okay. Now I'm tweeting. This is an academic question right now. Is this actually a good time to short? Ha ha ha. Because now in hindsight, we all know what happened on the following day. It went down further. So I have reason to ask this question. Okay? It turned out to be correct. So, check it out. Oh yeah, here we go. Good example. Higher high. Higher high. Higher low. Right? Here's the higher low. Higher high. Well, you could even say that's a higher low. Higher high. Lower low. And then it's going to come up. Okay? Very, very typical pattern. Typical pattern. Aha. Here we go. Same day, May 30th. Higher high made today. Seems now we have permission to pull back. Okay, so this is May 31st. This is the following morning. Okay. So this was yesterday. This would have been May 30th, right here. Right, see that? Down. This is the following morning. Down. So there you go. That was my question that I said. This is an academic question. Is now the time to short? The answer is yes. So this is May 30th, 31st now. Watch this. Look for it to take back 417.14. This green line right here. Oh, right there. Yeah, buddy. So now we know. Let me zoom in. It's kind of hard to see. It's hard to see. 417. Here we go. Here, 417.14. So at the time I tweeted it, it was going up like this. Here's the up right there. Here's the same tweet right there. So that was the first bull bar. I'm calling it the bull bar. You see multiple green lines here. 417.14, 417.49, right? 418, I think it's 83, 419.22. It has to pass these bars to go up, to keep going. And that's exactly what it did. Did I say it? Yep, scaling more long. I went long. 417.14. Right there. I scaled long right there. Right there. I knew it was going back up. All right. Okay. Now, yep, the evening, 4:20 p.m. after close, after market close. May 31st. That night, around 8 p.m. is when they were going to start the vote. It's been consolidating under EMA 50, the 65-minute EMA 50 since this afternoon, right there. See that? Up, up, down, consolidate, consolidate, consolidate. We all know what happened the night of the debt ceiling. But there was a twist, and I'm going to get into that too. So, zoom into that so you can see a little bit better. SPY 1 hour. So, this was, let's see, the debt ceiling. Yeah, waiting for debt ceiling vote tonight. Okay, yeah. When did I send this? 5:25 p.m. Okay, yeah. Okay. Going down. Okay, so here is the, that would have been, well, I called it a megaphone. Yeah, it's the megaphone. Okay? It's the megaphone. Megaphone line. Pattern. Under the megaphone. Consolidate, broke out, and backtest at closing bell. Under the megaphone. Broke out, backtest to the megaphone at closing bell. It found support at the top of the megaphone. Does it look like it's going to fall back down into the megaphone? Does it look like it's going to go this and then this? No. No, 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 no. So, I brought up Wednesday, May 24th, when NVIDIA earnings were released in extended hours. Remember that? Higher high, higher high. Consolidate, consolidate, consolidate. Up, up, up. Okay? This was SPY, by the way, SPY 1 hour. So it was already setting itself up by making higher highs later in the day, not lower lows. It was already setting itself up. Higher high, higher high, higher high. So, this was the same intraday pattern, except on May 31st. This was on May 24th. Higher high, getting ready for the debt ceiling vote. Okay. Now, this was the debt ceiling vote. So, what it did was, okay, here we go. It was consolidating, consolidating, consolidating. Went up. so what? Okay, I hope I explain it here. So, basically, I'm just describing how my analysis has significantly evolved. It extends way beyond now just me looking at the 5-minute, 65-minute, 195-minute. It involves looking left at previous 5, 65, 195, 260, and how those candles behave relative to each other to determine these, I will call the bull lines, the bull trend lines. Okay? Look left. I've said that all along. Now, I'll just go ahead and tell you what happened. Look, here's a lower high, lower high, lower high, lower high. That's the top of a wedge. See that? That's the top of a wedge. This megaphone bottom was the bottom of the wedge. So it went up, boom, came back down. This is the debt ceiling vote right there. Debt ceiling vote. Up, down. Like, oh, we're gonna crash. Oh, no, maybe not. Up, up, and then break out. This is breaking out of the wedge, guys. This happened overnight. The night of May 31st. Overnight, like after we all went to bed. This is already 8 o'clock in the evening. This is overnight hours. And this is when we came back in the morning. Went down, make a higher low, rip it up. Once again, guys, look left. Market maker is not only tracking to significant lines, basically like the megaphone lines and the half channels and the full channels that I like to quote. It's not only tracking to significant lines, it's tracking to a specific candle to retrace. It's how I'm specifically calling out these precise levels intraday. I'm figuring out which candle it's picking. Yeah, I'm starting to figure out. There's always room for improvement. I'm starting to figure out exactly which candle it's picking to retrace. That's how I know. You hit this level, you're going higher. You hit this level, you're going higher. Okay, June 1st. June 1st. Okay, so. Okay, yeah, that would have been up, up, up. This would have been following debt ceiling. Yeah, May 31st was debt ceiling night, eve, and this is, here we go. Check it out. Higher highs, higher highs. Okay, previous day. It's going higher. But of course, first, we all know what happened the morning of June 1st. Let's see, do I have that? Oh, I don't have it. It went down to make a higher low, and then it ripped up. Okay? So, now, okay, this is the explanation. Remember that wedge that I just mentioned? The night of the debt ceiling vote? It didn't take 4/19/22. Let's see here. This is it. This is the day before. This is when this is 4/19/22 right here. It didn't take it because it was part of a wedge. And if you did take it 4/19/22, it would be obligated to go even higher. When the debt ceiling vote concluded, instead, the debt ceiling vote made a lower high spike, right, that I just showed you. Then it went down because it's part of a wedge. Yesterday was a big wedge, lower highs. The bottom of the wedge was the megaphone top, higher lows. Okay. Yeah, that's just me. Let me see here. If I were in gunslinger mode, okay, this was June 1st. That would have been Thursday. This is Thursday now. We're on Thursday, June 1st. This is at the end of the day, the final 30 minutes or so ish. If I were in gunslinger mode, I'd get calls right now. But I'm here smoking my cigar. I'll explain more in a bit. So, Thursday, June 1st. Aha. Remember what I told you about the June and the August? Higher low, higher high, lower low, rip it up. It happened this Thursday, guys. Just like it happened on a larger scale. June 2022, August 2022, higher high. October 2022, lower low. Rip it up, baby. Market maker, I would actually say this pattern, higher low, higher high, lower low, then rip it up to make even higher highs. I would actually say this is the market maker's favorite all-time pattern. I see it over and over and over and over again, and there it is, June 1st, Thursday, it did it again. Sound familiar? Okay, so 421.22 is now officially support. It's no longer resistance. The August gap is now support, guys. Okay? Once again, look left. It's picking a candle to retrace. Ironically, the green, red colors and the wicks up, down, I discovered are illusions. Does that blow your mind even more? Yeah. It's all an illusion. That blows your mind, doesn't it? Just like it blows your mind that damn market maker is retracing the monthly highs to go back up. So, some of the bull levels that I specifically share intraday are actually from previous red candles. Yeah. Blow your mind when you finally see it. Look left. The market maker tells you what it plans to do. All the data is to the left. You just got to figure out which one of these candles is tracking to. Okay, let's see here. Yeah, this is like previous high, intraday high, debt ceiling high. See that? Lower, lower, lower. Higher high in the pre-markets, higher high, lower low, boom. Because it's breaking out of the wedge. It was forming a wedge the whole damn time this week. Boom. So, breakout move. Yeah, wedge breakout today. Well, this would have been Thursday, June 1st. So, the intraday high forced the debt ceiling to be a lower high. Intraday high forced the debt ceiling to be a lower high because it's part of a wedge. Debt ceiling could not go higher than intraday high because that violates the rules of the wedge. Just let that sink in, guys. Mull it over a cigar, if you will. Okay, I drew in, this was June, this is August 2022. I just drew in debt ceiling and the higher high, lower low, just like here. Debt ceiling, higher high, lower low. See that? Just so time and time again. It does this. It does this time and time again. And it's going to do it again, guys. I'll show you the tweet that I think's in the intraday action. While I cannot mentally calculate this like those geniuses in Mensa, nor can I memorize pi 3.14159 to the 10,000th digit like Haraguchi did, I do recall previous patterns, as you are seeing here today. And perhaps that's my curse, because I do obsess over finding these patterns. And this is just throwing in a little nugget. If for those of you who are interested in Bitcoin, this level is the key, 28,621. It's actually not this high. This is not the trigger that it's going to go higher. This is the trigger. 28,621. Okay? If it can take it, if it can take this level, not this level, 28,621, then it's going to go higher. If it cannot take 28,621, I predict this is the move it's going to do. It's going to go boom, down, make a lower low, consolidate under 25,871, and then it's going to make a higher high. That's what I predict Bitcoin's going to do. Periodic check-in. Ooh, boil. Our good friend, fellow trader who's very popular on YouTube, Gareth Soloway, 5 months ago said that Boyle bottomed at $10 and something. And I said, oh, hell no, it didn't. Hell no. Because where is it at today? $2.34. You guys, you have to be careful. I said it back then. I'm going to say it again. You be careful who you choose to listen to and who you choose, whose other opinion you take to be that of your own. And that includes, and I'm going to jump on them again, Maverick of Wall Street, Ron Walker, Dr. Cal, Money Time Machine. Be careful who you listen to. All of those bearish channels have done a disservice to the YouTube and to the trading community because they have thousands of subscribers. And they have to be losing money if they're listening to them. They have to be. You cannot be making money taking their advice. There's no way. Because all of them are trying to short the market or trying to preach crash. There's no way you're making money if you're listening to them. Okay? Yeah, here we go. More about Boyle. February 1st tweet. This is February 1st. Yeah, February 1st, right here. Actually, Boyle is in horrific shape. I said that at the time it was $6.46. I said, oh no. So yeah, Gary Soloway bought at 10.46. I said, no way. It's nowhere near the bottom. I said that on February 1st. It's down to two. What was it again? 243 or okay. UNG is also in terrible shape. No momentum. I didn't look at UNG. I haven't followed up on them. So this is laughable. You guys, I have said this on Twitter. I don't remember saying this on YouTube, but I'm going to say it now. You want me to say? You want to know something else that's going to blow your mind? SPY futures ES actually lags SPY. It's a complete illusion. Complete illusion. Futures has yet to reclaim the February 2nd high. This is last week, guys, by the way. Well, when did I say this? Oh, June 1st, actually. Oh, sorry. At the time, on June 1st, it has yet to claim the February 2nd high, 42.44. But here we are tonight, just under it. Okay, it has since yesterday. It reclaimed it finally yesterday. But that's 2 weeks after SPY reclaimed it on May 18th. Let that sink in for a second. Futures is not really futures. It actually lags SPY. But we bought into it hook, line, and sinker because in the media, futures, we'll go to the futures market, futures contract. And because we get so used to, it's a fact, futures went up and that caused SPY to gap up. Futures went down, that caused SPY to gap down. We just think futures is actually the future. It's not. SPY is the future. SPY leads ES. And QQQ leads SPY. Okay? Let that blow your mind. Life imitates arts exactly like the Matrix. Cypher's stake wasn't real. Futures isn't really futures. Intraday moves up can retrace previous red candles, not green candles. Guys, the stock market, the market maker algorithms isn't what you thought at all. It's totally opposite. Like I said, you guys been like to draw trend lines. Oh, look at this trend line from the January to April through August. Remember, you all love to draw that trend line for all of 2022. No, the market maker wasn't tracking to that at all. The lines were the matrix lines that were going in the opposite direction. Those are the lines that it was really tracking to. This whole thing is an illusion. It's unbelievable what I'm seeing now. Unbelievable. Okay, this was the night of June 1st. All right. Haha. See, now we have hindsight to know. I was asking the question, I'm not sure which one of these lines that are going this way, not a trend line going that way, which one of these lines it's going to hit. I wasn't sure. It was tricky. Well, now we know in hindsight. Guess what? Market maker chose door number 3. It took the February 2nd high. There you have it. Okay, so this is going to be my official announcement. I'm not going to cover the VIX anymore because this is it. I wasn't sure about ES. This was last night, by the way, right? I wasn't sure about ES, which one of these levels. That's what I'm talking about when I said unsure about ES. But I'm pretty sure that the VIX is having a rough go. You know, there was a rumor that someone put out a video last December that it was over for the VIX. And when I sent this tweet out, 9:43 p.m., Thursday night, June 1st, the VIX, negative 12.77, 1564. That was Thursday. And you all know what happened on Friday. It got even worse. Oh, how are those calls on UVXY doing, you hooligan bears? Good for you. Genius move. Genius move to go long on UVXY. Genius. I love it. Oh. This is important, guys. I need you to think about the following, and it makes sense. This is trading economics. This was Friday, right? Non-farm payrolls. The numbers for non-farm payrolls, unemployment. I want you to think about this for a minute, because I get a lot of feedback from various people. Well, the news, this and that. Well, it's going to be bad news. It's going to be bad news. Wait till the next CPI print. Wait till the next this print, that print, core CPI, core PCE. Your brokerage account does not require you to interpret the news or to interpret economic data. Your brokerage account requires you to interpret how the market maker is positioning itself for these events. I want you to think about those 2 sentences I just read. Think about it long and hard so that you're on the right side of the trade. That's why I never, ever listen to the news. I am only aware of the news so that I'm aware of an upcoming event that the market maker can use to manipulate to make a move. I don't care what the actual news is. I don't care what the actual non-farm payrolls is. Oh, it went up compared to the forecast, right? It was hot. But you guys have been conditioned in 2022 to say, oh, see, payroll's going up. That means the Fed's going to keep raising interest rates. So therefore, the market must go, what? Down. And you tell me what happened on Friday. Don't follow the news. The only thing I do nowadays, I just read headlines. And I've got the gist. That's it. I don't go deep into, well, who said this and that, and negotiations for this and that. I don't care about the details. I just read the headlines. I got the gist. That's it. Okay. 10 p.m. Thursday night. Zoom in. I'm showing you here the 60-minute. This is futures. Futures 60-minute and futures 5-minute. Oh yeah, here we go. Okay, do I? Oh yeah, here we go. Here. Look at the MACD. Above the 0 line and curling up. The left is the okay, upper right is the 5-minute. Yeah, here's the 5-minute. Above the 0 line and curling up. There's Thursday night, guys. Thursday night. The left is the 1 hour, the 60-minute. The MACD is consolidating under the plus 10 line. That is the bull line. Important. Pay attention. The plus 10 line on the 1 hour chart of ES is the bull line for another up move. Pay attention to that. 5 minutes stays above the 0 line, which consequently curls the 1 hour MACD up. Could be positioning to surge. This was Thursday night. We all know what happened on Friday. See? There you have it. Oh, hell. No sooner than sending out this last tweet, which is this one, this sumbit just went parabolic. Boom, 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 boom. Because he was headed towards the February 2nd high to take it back. And like in Sia's song Unstoppable for you hooligan bears, the lyric goes something like, oh yeah, I'll tell you what you want to hear. Leave my sunglasses on while I shed a tear. It's never the right time. Oh, okay. We're going to get into some intraday tweets and conclude this episode. Its target is 424.95 to keep the uptrend alive. That would have been this line right here. Right here. So this is opening bell. That would have been that line right there. Let me zoom in so you can see it. Yeah, 424.95 right there. See that? 424.95. Again, I got this because I figured out which candle it was tracking to the left. That's how I got that number. It could hit 424.95. It could then turn down to make a lower low, but the next target up is 427.41, 427.21, 424.95, 427.21. Okay. Now this is before opening bell. See that right there? Now in hindsight, look what happened. This is 424.95, 427.21. Look at the perfect pivot points here. Here. You guys, you cannot be more precise than that. I'm calling out the exact levels it's going for. There's opening bell. Here's, you got to be kidding me. I didn't expect that bullish of a move. I thought, oh, it's gonna come up here, kind of fart around, kind of go down here, then go back up. It just poof, went up. But we all know what happened. By the way, it perfectly stopped at this. This would have been a 1/8 channel line. So it goes half channel. Oh, sorry, this is half. 1/4. It goes half channel, 1/4, 1/8, 1/4, main channel. So it started with the half channel, back tested to it, went all the way up to the main channel where it stopped. And you existing listeners have always known I've talked about these channels for months. Months. I'm not making this stuff up as I go. You existing listeners know. So here's the half channel, 1/8, quarter, eighth, and then main. Okay. Oh, here we go. Here we go. What's next? All right. Right here. Right here. This wick up right here. So I've seen this. I actually did think. Here we go. Nibbling. Small position short. So this is my general advice for you newer traders. Your first trade should always, 100% of the time, be your smallest position size. I cannot emphasize that more. It goes to risk management. Risk management. You do not go all in on your first trade of the day. Because if that thing goes south on you, you cannot recuperate. Now you have to sit on your hands. Okay? So, that's my general advice. It should always be your smallest position. So, see, here we go. I scaled, I nibbled short when it was actually wicking up. Scaling more short. See that down right there? Right here. Yeah, right about there. I'm scaling more. But now you see, though, and this is what I've always been tweeting for you guys that have followed me intraday. Now we see how it interacts with the main channel, right there, and EMA 50 would have been, yeah, well, it would have been right there. Yeah, right there, main channel and EMA 50. Main channel, EMA 50. Actually, it's technically a half channel. I misstated that. It's a half channel. Okay. But as look at this, guys. This is classic old school. Down, support at the main channel. Down, wick up from EMA 50. Wick up EMA 50. What does that mean? Back test successful. Wick up. SMA 20 found support. You have not only a wick up, you have support on SMA 20 gray line. You have lift. And what did I talk about last episode when I talked about the hidden bull market on the monthly? You have lift. Okay? But you see here, I was going short. But right here, you're going to say, uh-oh. Wow, it's going up. I'm scaling long. Because I saw this. I saw what I just told you. EMA 50. Main channel support. SMA 20 support. Lift. I'm like, oh, crap. Okay? So I abandoned my puts. Yeah, it's basically break even, right? I got some up here. I got some right there. I'm out. I'm not messing with this. I'm out. I scaled long. Okay? So, here we go. That's what I just explained. Back test to EMA 50. Has lift off SMA 20. But I figured, that's why I went short. I figured the main channel and EMA 50 would reject. It didn't. It didn't. So you have to be able to, you must, not you have to be able to, you must switch your thinking instantly. Don't sit there and think about it. It's like, oh no, it can't go up. Don't abandon your trading rules just because you have conviction that it's going to go down. You must be compelled, and you're going to see me tweet about this a little bit later. Okay? You must be compelled to act according to your trading rules. You cannot override your trading rules just because you thought it was going to go down. Just because you had high conviction it was going to go down. You must change your thinking instantly and without regret. You have to follow your rules. Otherwise, why have your rules? Why have trading rules when you don't plan on following them anyways? Okay? Keep in mind, this is not my money I'm talking about. This is your money. Okay? So you gotta be open-minded. You cannot commit to a direction. Ah, boy, look at the MACD. You kind of can't really see it. It's a little bit out of view right here. The MACD, there was bearish divergence, meaning this was lower than there's the previous hump. You can't quite see it. It's just out of view. It was lower, but that just negated right there when it went higher than the previous hump. See? Higher up there, higher up there. Like, uh-oh. This thing's going up. This is Friday, guys. It met all the criteria earlier. channel, EMA 50, SMA 20, backtest, support. That's it. There's nothing left to think about. It's like, oh my God. Okay. All right. These are the bull uptrend levels, the bull levels that you're tracking to. 27, 21, 427, 21, 429, 41, 431. Oh, that's the August 16th high, by the way. That's it. 431.73. Okay. Now, you must keep this in mind. Once it hits these levels, it has permission to go down, retrace, but that's not always true, as was the case yesterday. You start hitting these levels, you start taking these levels out, 427.21, you know, well, it could go down. You have permission to go down, but did it? No. It kept going up. Wow, let the squeeze begin. 427.21, go bye-bye. Right there. Yep, look at the two circles. Back test to 424.95, 427.21. Back test to it. Here's 424.95. Here's 427.21. Back test. Back test. Whoop. Up, down. Back test. Up, down. Back test. 424.95. Green. Up. See? I mean, what do you want me to say? Yeah. You can't look at this and say, well, that's bearish. But we're going to crash. How? The data simply does not support that conclusion that we're going down. Okay, up here, right there. Right here. I scalped out. I made a good gain there. It was a pretty good gain. Scalped out. If it makes a higher high again, I'll scale back in. So that was at this point right here. That would have been right there. And it did make a higher high. I'm like, damn. Okay. Scaling long. It made a higher high. Now it came up, down, chop, higher low, up. There you go. It's making higher highs. It's signaling it's going higher. Oh, here we go. Perfect example of what I was talking about earlier. Okay, let's see. So here, higher low, higher high, lower low, up, down, up. There it is again. Again and again and again and again. I do now believe squarely this is the market maker's favorite all-time pattern to run. Higher high, higher low, higher high, lower low. So if you see this pattern, higher high, higher low, higher high, I would actually wait. Don't get calls on this second higher high now. Wait, it's going to make a lower low. Then get calls. Okay? I actually jumped the gun on that one. I should have waited. But nonetheless, it doesn't matter. The end result is the same. It's going higher. See what I mean? Next intermediate target, 428.25. That would have been up here. Well, see, I called it the half channel, thinking that was the main channel, but actually, this was the half channel. That's a main channel. Okay? Now, 428.25, guys. That's exactly where it went to. It stopped at that pivot point, right? 427.21. It stopped at 424.95. It stopped at 485. We'll just call it 425.28. Up, down, up, down. There you have it, guys. Oh, looking back on Thursday night, I should have went gunslinger. Yeah, this was Thursday night. That's where I tweeted, well, if I were in gunslinger mode, I'd get calls right now at the end of the day. Remember that? Remember this? Should have got calls. Because that would have been one hefty gain today. Getting the lows from towards closing Thursday, the day before. But instead, I was farting around with my cigar. So there you have it. Armchair quarterbacking, kind of like what Ron Walker does. He doesn't actually trade. He just kind of watches TV and plays a trader on TV, right? He likes to armchair quarterback, but doesn't actually trade. Okay, so remember when I got in calls right here? I scalped out up here, 11%. I want to see more lift. It couldn't. Let's see. Yeah, it couldn't get off the line. Like it couldn't. It kept touching the line. It's like, you know what? I'm gonna get on out of here. I'm gonna get on out of here. So that's why I got out. So I scalped twice. Right? Scalped twice. Calls twice. Good gains. Did not get to 430 today or yesterday. That would have been up here, right? Didn't get there, but one hell of a run. Okay, one hell of a run. I am getting closer and closer to be able to calling out the market maker's number. I'm getting closer, as you see here in these tweets. I'm getting there. Still have some. There's always some things I can keep looking into, and I am, but I'm getting there. First, I went short Friday morning, but I quickly reversed and I went long. Once again, guys, I cannot emphasize this enough. It is critical to let go of your convictions. Let them go. The data, not my convictions, compelled me to go long. It backtested EMA 50, the main channel. It found support at SMA 20. My brokerage account needs me to stick to the data, not to my convictions. And keep in mind, your convictions are influenced by what? The news and economic data. So you need to keep an open mind. And once again, I'm going to say, this is your money. I'm talking about not my money. Okay? Tweeted this out. The market maker is AI whose prime directive is to mercilessly annihilate traders without prejudice or emotion. Defeating the market maker requires trading under the same modus operandi. Let go of your convictions, because those convictions are equivalent to what? Prejudice, bias, or emotion. Let it go, because your enemy, AI, market maker, is not operating under the same auspices that you are. At the end of the day, it's straight math. Straight math and numbers that AI market maker is working from. Straight math, not emotion. Okay, here's a little thing what I think it's going to do next week. Not next week per se. No. I misstated that. Ultimately, doesn't mean next week. Ultimately, it will retrace to the 418, 422 area. Former megaphone and wedge lines. My guess is 418. Monday. Watch for if it pumps to 429.41. If it reclaims it, it's going higher, guys. It's going higher to 431.73, the August 16th high. All eyes on Sunday night. So, this is the former megaphone top that goes back to the June 17th low. This is the wedge bottom that goes back to the March 13th low. it's going to find a low, and this is the August 19th gap. So it's going to find a bottom somewhere in here. I don't know exactly where that is, but it's going to be somewhere in here. Knowing the market maker, the reason why I said I guess 418, which is down here, it loves taking it below the levels, not bounce off top of it, below it, come back, underneath of it, consolidate, and then rip. So it is therefore important. Okay, that's what I think is coming up. Now, I also tweeted this out today. Yeah. This is the SPY. Daily MACD, one day, daily MACD. 3.15 is important on the MACD right here, 3.15. This goes back a year, guys. This goes back to June 2022. Right here. This is June 2022. It just crossed it. And for an entire year, once it crosses it, it doesn't just go back down. Look, the entire year, up, down, up, down, up, down, up, down. It crossed it again on Friday. It could still go higher, guys. It crossed it on Friday. Be careful. It can still go higher. The market maker knows that we know where the peaks are. The market maker knows that we know to short the higher highs. Can keep prices high to burn put premiums. Recall February 2nd to the February 2nd high to the February 16th fall. That was a 2-week time frame. The market maker kept it up there, burning premiums, before it finally did fall. And when it fell, right? Because when it's making lower highs like it did between February 2nd and February 16th, it was making lower highs. That's just burning time, essentially going horizontally, like this, lower high. It's just going horizontally. But the reason why the February 16th fall was so precipitous is because it was just making up for lost time. Because it knew it was farting around going horizontally for 2 weeks, whereas on February 16th, it just dropped. It just boom, straight down. And it did it overnight, by the way. It stupid gap down. I remember that. It gapped down and then went down. Okay? So that's another classic market maker scheme. Kind of, oh, lower high. Oh, is it actually gonna go back up and then drop? So there you have it, guys. Oh, hold on a second. Got to get to, here we go. Feel free to follow me on Twitter, where I give real-time tweets and intraday updates. Don't forget to listen to your favorite song while you are trading. Helps you get in the right state of mind, get in the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00 Woe, signing off.